Buongiorno. We are back with a quick update on what's happening with the market right now. So it's been an extraordinary year based on, again, things that I was working on since last year in terms of I was waiting for a crash. I knew a crash was coming. We had been long overdue for a crash. The market was doing too well for too long. Can't just keep expanding forever. At some point in time, there's going to become a crash, right? I think a lot of the stock market, I think, is, in a way, it's a game of chicken, right? How long are you going to keep the pedal to the metal? And, knowing something is coming ahead, how long will you just stay in it, just keep going? Unfortunately, the way that you win is in knowing when to quit. The losers are the ones who just keep the pedal down and just keep going, I know, more money. And then you crash, right? But that's not me. I try to keep my emotions outside of my investment decisions. I try to keep it logical. I try to keep it technical. So I don't get into, I see a lot of people talking about what's happening with the market doesn't make sense. It's all over the place, right? Why is it that, the stock market is doing so well when the economy is doing so bad? And I keep got to say the same thing over and over again. It's the stock market does not represent where we are now. The stock market is, in essence, a time machine. It represents where we're headed. It represents future earnings. It represents what the investment community thinks about where we're headed, right? What's happening right now, or what has happened this year, represents the fundamental trading concept. Buy low, sell high. People got all kinds of formulas out there and strategies, and I got this, and I'm looking for this pattern and that and that. Buy low, sell high. Now, I know obviously easier said than done. No one has a crystal ball. No one can fully anticipate what's going to happen. We could go to war tomorrow, right? That could happen tomorrow. Some incident that happens in the Atlantic and fired some missile. And next thing you know, World War III has begun. How on earth could anyone predict something like that? So that's always something you have to consider. That's why I always say, never invest more than you are willing to lose. Never invest one dime more than you're willing to lose. All the money that I throw into my portfolio, that I've thrown into my portfolio over the years, every dime has been expendable. If you don't have expendable income, and we all, I would say most of us do to some degree. Now, what you can do with that is a different story. Because, if you only have $1 to spare, you do have $1 to spare, so you could invest that. But you're not going to do much with $1 investing in the stock market, obviously. But never invest more than you're willing to lose. Always consider that you can lose 100% of your investment. And if you're a real cowboy, consider that you can lose more than your investment. For example, something that I've talked about in the past, selling short. You can make a lot of money with that, selling short, but things don't go your way. The losses there's no cap. There's no cap on how high the stock price can rise, and you're going to have to buy back those shares that you borrowed. And I talked about what short selling is all about. But what is happening now with the stock market? What am I thinking in terms of my perspective on what's next? What's my next move? Remember the last move prior to the crash was I saw things were headed sort of on a downtrend. So if you remember, I did that video, I think it was last year, I don't know, third quarter or so, and I said gold. Remember I was talking about gold might be the thing. At that time, I think it was 1,400. I think it was even less than that, to be honest. Gold just smashed through 2,000. So per coin, depending on what point in time you bought, you could be looking at $500, $600 profit per coin. So we're going to talk about gold a little bit, and we're going to talk about where the market is heading right now. In my opinion, obviously, I can't predict what's going to happen, right? This is just my my feelings or my estimate for what I think, or my projections for what I think where I think things are headed. I'm becoming a little bit concerned about what's happening. If you remember the sort of strategy and projections that I had made initially for what was going to happen with the market, been very accurate, but the tail end of my predictions did not quite work out the way I anticipated, and that's what is kind of concerning me. I anticipated a major crash. I saw the signs that crash was beginning, so I accurately did see that. My prediction for the bottom was very, very close. So close, in fact, that the time that I jumped back in the market, I think I was making profits. It didn't take me long to start making profits. Now, I was down in the bottom there, so of course there was a short period of time where it went negative a little bit. That's to be expected. Of course, I'm not going to time the market totally perfectly, but I was profitable pretty quickly, so my predictions for the bottom were pretty accurate. My prediction for the recovery was pretty accurate as well. If you remember, I was thinking about that it was going to be pretty aggressive in terms of shooting back up because of many people like myself, opportunists jumping in on the crash, trying to get the discounts, and then riding that wave. There would be people like myself who would jump in a little bit earlier, a little bit ahead of the curve, and there would be people who would follow our wake. So I go in and I jump in, and other people jump in, and other people see the prices are going up, and they're like, "Oh, wow, what's happening?" And you have people that are very pessimistic, sort of sitting on the sidelines, like, "I don't know." While they're doing that, other people are jumping in, and it's furthering this sort of domino effect. So you got this wake of sort of what we're talking about is momentum, right? Momentum trading, right? So because of the trading activity from the people who sort of are ahead of the curve, the first ones to start thinking that now is the bottom, now is the time to jump in. The more that we're doing that, we are sending signals to other people that now is the time, right? And they start jumping back in, and again, a domino effect. So it's like it just right starts going up. However, I predicted that we would have a potential long road for recovery. Now, I'm not talking about the stock market. I'm talking about the economy. What I was talking about, and it's already happening. Remember, I talked about companies going out of business, major names going out of business. We lost a lot of small businesses as well, but major names filing for bankruptcy. I talked about millions of people being out of work, so massive levels of unemployment. I don't know if we really touched on GDP stuff, but that's definitely something that would be expected with that kind of negative economic activity. And the thought process was that this would be unprecedented and quite severe. So again, domino effect, just like the domino effect with the trading activity. I'm buying, you see me buying, you buy two, somebody else sees us buying, they buy two, and so on and so forth. So millions of people unemployed, major company goes bankrupt, more people unemployed, more companies go bankrupt, um, negative signals, negative signals, negative signals, negative signals, um, foreclosures, a lot of just negative news. That would put us potentially into a long-term sort of compression, right? We were in a very long expansion. Now looking at a period of compression. Now, some people thought about, or contraction rather. Some people talked about recession. We're going to head to a recession. Just like my predictions on the market crash were very pessimistic, and turns out my pessimism was warranted. My thought process on the economic damage in the wake of this crash are also equally pessimistic. So I didn't spend much time thinking about recessions. I pretty much jumped pretty aggressively to thinking about depression. Right. So now we're talking about a much longer period of time of contraction or just economic negative times. So market not doing very well, GDP not doing well, just not very good times in this country at all, and long term. So my initial projection was, in terms of my investment, was a 4-year window. So I was not gonna make any moves that I wasn't willing to wait 4 years to reap the benefits of. That's how long I thought it would take before we get out of the real bad situation. So with that being said, what concerned me is the momentum trading, I think, went out of control. In the beginning, those that don't understand the full dynamics might have been surprised. Why is the economy so bad and things are bad? And look at the market, record days. If you understand the fundamentals of how the stock market works, I don't think that should be surprising to you at all. The stock market crash of 2020 represented the most exciting, from an investment standpoint, opportunity that I've ever seen. I've been in the investment banking world since 1999, right? So this is 2 decades. And although I have not been investing myself most of the time, from all that I've observed, this definitely represents a historic opportunity in terms of for investments. Because the key thing from investing is you're looking at future growth. So the more significant the delta from the price at which you acquire whatever instruments it is that you're purchasing, the better or more significant the returns, right? So if I can purchase something that is significantly undervalued due to a temporary situation, so market crash event, we got this COVID-19 thing shutting down the economy. Obviously, the economy is not going to shut down forever. COVID-19 is not going to be forever the way it is. The vaccine is going to come out eventually, hopefully. So we're looking at temporary events, but catastrophic events. So massive discounts, and therefore massive levels of opportunity to get those discounts. And then also massive levels of opportunity to realize pretty extreme levels of gains after the crash. Because again, I'm no genius knowing buy low, sell high, right? That's not some genius plan. So tons of people are obviously aware of the concept. So tons of people are going to be looking at, whoa, this could be a good time to make some money. So you look at that across the board, just regular people like myself. You look at across the board, the top 1%, major, hedge funds and other entities that are obviously have much larger positions than myself, all jumping in on this. So the potential for massive and quickly realized gains very high. So the quick rise was not surprising at all if you understand the fundamentals of how the stock market works. However, that wasn't supposed to last as long as it did. And when I say not supposed to, the stock market does what it does, right? It's kind of a got a mind of its own, shall we say. However, even though the market represents future earnings, the reality is times are really bad right now. So, in my opinion, the period of the rallies shouldn't last that long, because you have a bunch of people that are jumping in right now, and their primary focus is not that the economy is great and we've made it. No, they're just taking advantage of the opportunity of this crash and then the bounce back. But it's just a bounce back, right? We're still in a bad situation. So the main thing is you're looking at the prices sort of being corrected, right? And being adjusted, because they were hurt because of a lot of fear. Oh, what's happening? Things are bad. Everyone's, sell everything, right? And then you get the momentum taking it down. So the prices would eventually get lower than they need to be. Things were definitely very bad, so the prices being low is understandable. But they definitely got a little bit too low, just because of, again, fear and the momentum trading of people like, oh my goodness, how low is it going to go? I got to get out of this market, right? So we got to flip that as well. Just like how momentum trading perhaps pushed the prices lower than they should have gone, the reverse is very possibly what's happening now. There's a logical initial bounce back, again, because of all the opportunists jumping in, taking advantage of the discounts. But times are tough. So bounce back makes sense. However, the prices shouldn't go too high, because right now things are really rough and the future is unknown. A lot of risks, a lot of potential opportunities for, well, I don't know if it's opportunities, but definitely a potential downside. So the prices should bounce back aggressively. Yeah, that makes sense. But they should quickly sort of settle down, right? Let's look at what's happening with the economy right now. Let's look at all the uncertainty. Slow your roll. That didn't really happen. I mean, maybe it did to a degree, but at some point in time, these rallies continued. And right now, the prices where they're at right now, I mean, I'm looking at my portfolio, and I think I've never seen these kinds of numbers. I mean, I think I'm up 40% or something ridiculous. I think I showed you the graph already. So this is, I don't know if you can see this. It's probably too overexposed. Yeah, sorry about that. I guess you guys can't even see that at all. Maybe, let's see. Can we dim the screen a little bit? Let's dim the screen. Dim the screen. Let's try that. And boom. That look better? Horrible. All right, so you can't see it, but basically started here, started from the bottom. Now we're here, so it's just straight up. And as far as percentage change, let's look at positions. So 32% and 24% gains. So pretty significant. But the problem is, I think momentum pushed the prices too high. It's just too, initially it's the momentum trading, it's the bounce back, so it makes sense. So that's fine. I'm not worried about that. But just like where the market went down too low because of momentum, I think it went too high because of momentum. So that would suggest a correction. What kind of correction would happen now at a time like this with all this negative financial news? A lot of negative indicators for the future. What would happen? Obviously, I can't predict the future, but I am very concerned. And as of the last week, my thought process has been, this is hard to do, and this is why you got to really separate the emotions. But I am human, so this is something that's a little bit challenging for me. I realize that even if the market crashes or takes a big hit, I got in so low that I'm probably not going to be affected. And if I just stay where I'm at, long term, things will look really good. But things would look even better if I preempt another major decline by getting outside of the market and waiting a sufficient amount of time before jumping back in. Probably a long-term exit, because I've already realized a lot of gains. If I exit the market with my gains, take my money off the table, allow the market to fall drastically, and then jump back in at the right point in time, I don't know if I'll do the 30% gains again, but I could get another 10% perhaps plus, right? So at the end of the day, by, I don't know, second quarter next year, I could be looking at maybe a 50% gain total when all is said and done. So that's kind of where my head's at. Is it time for me to exit the market? The market is just too hot. This is before, when people were saying the market didn't make sense, they didn't understand the market. But now the market actually, to me, doesn't make sense. Perhaps the guys that get into the nitty gritty will tell me, oh, well, you got to look at this and that. I don't get into those details. I'm a total technical guy. I just look at patterns. I look at history, and I make my projections based on that. And I've done very well with my predictions based on that sort of methodology. So if it's not broke, don't fix it. So I'm going to stick to it. And based on that, I am now on the fence. And then the other thing is gold. Now, buying gold, when I was talking about gold, would be a perfect investment. But now gold is very high. So the question is, will gold continue to rise, or is gold also very dangerous? Because again, buy low, sell high, right? Gold is high right now, in theory. However, if things get really, really bad and they continue to go on a sort of a negative trend or downtrend, we could see gold go even higher. And maybe gold is actually not high right now. I know certain people that have vested interest in gold. I'm not going to call any names about certain individuals that have YouTube channels that keep talking about gold, gold, gold. Meanwhile, they're selling gold. I have no vested interest in gold or anything like that right now. But I'm at least thinking about gold. Should I exit the stock market and invest in gold? Depends on how pessimistic I think about what's happening in the future. If things are not quite as bad as I'm perhaps thinking, then I don't think gold will go that much higher. In fact, maybe gold will stabilize and maybe fall back a little bit, because I think a lot of the buying activity is based on a lot of pessimism in terms of what's happening with the economy. So that's a tough one. I could exit the stock market, purchase some gold, and then the economy recovers faster than I expected. So gold loses its momentum. And worst case scenario, I lose all the gains that I got from this year. So that's a tough one. I think ultimately the decision I'm going to make if I do decide to go with gold is I'm probably not. It's too late for an all-in move. I'm not that pessimistic. So I might take a smaller position. So go mostly liquid and exit the market, predominantly cash, and then take a small position with gold and see how that goes. Maybe make it a position that is small enough that a worst case scenario wouldn't take away all the gains that I had in the stock market. Obviously, by doing that, I'm going to take away a lot of potential gains because obviously the smaller the position, the smaller the potential gains are. But I got to find a middle ground. The more risk, the more potential reward. But if you take too much risk, you can wipe out all the potential rewards and take losses and go the other direction. So I don't know. I'm undecided right now. I'm more decided on exiting the market than I am, or exiting the stock market than I am in entering the gold market. Gold market is a huge question mark. I think it's very hot. So I'm a little bit afraid of gold right now. But the stock market, I think, is definitely too high. I think the logical approach, completely detached from emotion, is for me to pull out of the stock market and get on the sidelines for a bit and then decide what's my next course of action. Probably what I'm going to do is I'm going to do further analysis on the gold position in terms of look at history, see how gold has performed in the past, understanding that a lot has changed in the world. So I can't just look at what happened in the past and expect it to happen now. That's just to give me sort of clues in terms of what might happen. But I need to think about that in the context of 2020, right? The way that the world is today versus necessarily the way it was in the past. But I got to do that assessment, do that analysis, and basically a risk assessment, right? And also do some further analysis in terms of how bad are things going to get. I'm still not even sure. Are we really going to have a depression? Is it going to just be a recession? I got to answer those questions before I determine what my course of action is going to be with gold. So got to figure that out. Got to do the analysis and then make a decision. But initially, right now, I'm looking to jump out of the market. I think it's too hot. It's just too hot. It's been a great run. I've made a good amount of money from what's happening this year, but I think it's too hot. I think it's too hot. So at some point in time, I'm gonna, at a minimum, I need to start liquidating some of these positions, making them smaller, exiting more. I mean, I already have a good amount of cash that I pulled outside of the stock market. So I think what I'll probably do is set some limit orders. Yeah, it probably makes more sense rather than to just jump out. It's nothing that warrants that kind of urgent action. So I'll probably do an analysis of where the market's going right now. I'll extrapolate what the first signs of the market reversing is going to look like, and then try to set limit orders to be triggered based on that activity. And I may sort of trail the market a little bit, where I set an exit point here. The market is here. The market defies my strategy and continues to grow, but I'm trailing the market. So then I increase my exit price, right? And then just keep trailing the market. That way, what I'm trying to do is I'm trying to make sure that I don't lose opportunities in terms of, I don't know when the market's going to reverse. So if I just exit right now and the market continues to grow, that's going to be money lost, right? Opportunity losses. So I want to make sure that I'm not exiting until I really have to. So if I could just sort of trail the market that way, so I can ride it up, but have that exit. So if it does reverse, then it triggers my limit, and I get out of there before I start taking some losses. Of course, the trick with that is that some short-term market volatility could push me out of the market prematurely. So, for example, let's just say the market has a bad week. Has a really bad week to where it turns negative enough that it triggers my exit, my limit price. Sell. Now I'm out of that particular stock. Then the following week, it reverses and starts growing up again and maybe doubles. So I missed that gain because I exited the market too early because the volatility pushed me out. So the best thing I can do with that without using algorithmic trading, which I'm not using, is I would need to set a sufficient buffer between where the market price is and where my exit point is. And I'm already so high in terms of the percentage gains, 30% or whatever. So that should be very easy to do because I could set it where it's significantly lower than the current market price. And yet, it doesn't really matter. Like the market would have to really go really like another major crash before I go negative. So I think if my position wasn't so high in terms of my gains, there would be more of a risk, because if I set the limit price too low to where maybe it's lower than the initial price that I paid, then the market could actually go down lower than what I paid. Now, when I exit, by the time I exit, I'm actually exiting at a negative. There's virtually no chance that I'm probably going to end up going negative. So it's just a matter of, again, trying to conserve as much of the profits as possible. So that's something I'm probably going to look into doing, so I can continue to ride the wave as much as I can, only exiting when I really get some negative, sufficient negative signals that are indicating that it's time to pack it up. So that's a perfect segue. On that note about packing it up, I'm going to pack it up right now with this live stream. If you enjoyed this video, definitely click on the like button. Hey, man, I see Edwin Argwal just joined. Good to see you. Thank you very much for the well wishes. So on that note, if you enjoyed the video, you know what to do. Click on the like button, subscribe, smash that bell. Be well. Now I'm going to go and get back to my program that I've been working on, that I did the video about. So I made a lot of progress. I think I'm 75% to 80% done. I just completed function number 2. So the first function was a skill. The skill function, load skills. So pretty much loading from the CSV file the skills and their rankings, and pretty much converting that to a dictionary. And then the latest function that I just did was the load job function, which is basically iterate through the skills, count each skill, append to a job dictionary, only when there's matches, of course, and then count all of that and give you sort of the aggregate of, basically the score, like how well the job scored in terms of relevance to your background. So the latest thing I added a feature of giving you a summary of all the skills that were found in the job description. Here are the top ranked ones. I think I did the top 10. So just giving more information to the user in terms of what's happening. I also added more sort of prompts for the user. So as I'm checking the skills, you can see on the screen, I found that skill. This is a score for it. I found that skill. So the user is getting more feedback in terms of what's happening. So I think I'm pretty much done with that. There might be one final feature that I want to add before I move on to the next feature, or the next function rather. I wanted to add arguments, and this was actually for some of the test cases for making sure that all scenarios, things work as expected. So what I wanted to do is I wanted to add the ability to use arguments, so you can specify the actual file that you want to look at for the job description, and then I'm going to use that to basically create a loop that is going to loop through a list. So I have 10 files that each have different job description, and I want to be able to loop through that list. So you're going to keep calling the program, sending it the argument for one of those files. It's going to consume the job description, do the analysis, show you the results, exit, consume the next file, do the same thing, exit. So you're going to go through, you're going to see, basically, you're going to be able to see 10 scenarios. Here are 10 different job descriptions. And here is the result of that, what the application did with it. So I can see how it's performing. So I want to make an assessment of how good the application is performing in terms of the results being meaningful, as opposed to just sort of being a little bit too gimmicky. So based on the results, I'll make a determination whether I need to tweak some things about the logic of how this works, or I'd be happy with the results and say, great, now time to move on to the next branch, which is going to be working on the next function, which is going to be the resume. So the load resume function is going to pretty much be able to parse the resume and construct I still have to determine what data structure I want to use. The initial thought was, I think, nested lists. But then I started thinking that a dictionary might be a better way to go. But then one of the issues I have to resolve is dealing with synonyms. Someone can use different words to mean the same thing in a job description, and I need to be able to recognize those things as a single. So for example, let's say I want to categorize Unix and Linux as the same type of thing. I need to be able to, if you see one occurrence of Linux, one occurrence of Unix, it's going to be a sort of seen as the same thing, right? So when you're doing the response letter, because that's the thing, when a response letter happens, I don't want to be too verbose to where every single item, it's like, Linux was used here, Unix was used here, Red Hat was used here. No, there should be a sort of a theme. The theme here is whatever I decide, let's say we just call it Unix. So if I see Linux, Unix, and Red Hat in my response letter, I'm not going to refer to all those different names that's kind of talking about the similar thing. I'm going to just say Unix, right? So I got to figure out the logic of how that's going to work. But that's my task. Hopefully I can get going on that today. And I think by this weekend, hopefully, I will be done. And then I will do my first deployment of this program, which is going to be an open source project. So I will be inviting the community to join in, and maybe they have some ideas of some things, changes to the application, and people want to contribute and add some sort of value, and who knows how far this will go. At some point in time, we'll refactor and go GUI instead of just command line. That'll be nice. Make it real slick, more user friendly, and ideally, obviously, I want it to be something where people would actually use. Right? I mean, it's a great learning experience for sure, but ideally, I think a remarkable accomplishment would be one where people actually see value in the program to where people are using it. So we have a community of people that are maintaining it and growing it, making it better over time, and we have a community of users that actually enjoy using it as well. That would be awesome. But one step at a time. Let's finish the first release and actually see this thing in action, and then go from there. All right, guys, be well, be safe, and until the next episode, thank you for watching. Salut! Arrivederci. Ciao. Dobre noche. All right, guys, I'm out. Out. Do. Ciao.